Good afternoon. Welcome to Midcap Radar. I'm Sonu Bhutra and with me is Reema Tendulkar, and these are the top headlines at this hour. Market at day's high as hopes emerge of a takeover of beleaguered SVB in the US. Healthcare and metals gain while utilities and jewelry drag.
Morpin Laboratories surges in trade as the company's API facility at Buddy in Himachal Pradesh gets a US FDA clearance with zero observations.
Crompton Greaves Consumer Electricals announces a merger with recently acquired Butterfly Gandhimati with a swap valuation that favors the parent. The Butterfly Gandhimati stock slips.
ICICI Security puts a spotlight on Balkrishna Industry. The brokerage says the weakness to linger for a couple of more quarters as industry exports continue to remain subdued, though it has buy rating on the stock, target price 23.78.
Nykaa hit by management exits as 5 more executives resign from their roles in the company, while Dalmia Bharat surges as company enters into an agreement to divest its 42.36% stake in Dalmia Bharat Refractories. Okay, those are the top headlines on Midcap Radar. For the markets, by the way, it has fallen sharply from the highs. It's a 50-point cut from the top of the day. The high that we touched today was 17,061. So right now we are just at that 17,003 mark. Couple of these names which have fallen from the highs leading to this particular fall that we are seeing from the top. We have Apollo Hospitals, ICICI Bank, NTPC, Tata Steel and JSW Steel. So some of these big names which are putting pressure on the Nifty from the highs. Midcap index too has turned into the red, so that index is down by 60 points. So continues to be a day which is seeing mixed cues. Reema, we'll have to see which way things go.
Indeed. Just the fall in the mid-cap space, the underperformance is a tad bit disappointing. Even the small-cap index, at one point of time, the small-cap index was down close to about 1%. Let's pull up the Nifty small-cap index, and that's also currently down 1.3% on that. So small-cap and the advanced decline ratio continues to struggle in trade. But let's drill it down to individual names. This is our Midcap Movers segment, and today we've got Nigel joining in. He's at the big wall. Nigel?
Well, that's right. In the broader markets, there are plenty of stocks that are moving around on good volumes. Navkar Corp, well, that stock is up close to around 17.5% odd. Vijaya Diagnostic as well, that stock is moving higher on fairly good volumes, up close to around 8.5% odd. But on the flip side, there are quite a few stocks that are moving lower. So you have SMS Pharma, that stock is under some pressure. TerraSoft as well is seeing some selling today. As we speak, the stock at the low point of the day. VLS Finance as well as UFO Movies. All these stocks are down anything between 6.5% to around 8.5% odd. Now, there are a few stocks that are making fresh 52-week lows as well. Case in point being HAS Transact, you have Aditya Birla, Sun Life AMC, as well as Aarti Surfactants. All these stocks, they are lower in today's session. They're making a fresh 52-week low. But there are a few stocks that are bucking the trend and making fresh 52-week highs as well. Bharat Wire Ropes, you have Cyient, as well as ISMO. All the stocks doing pretty well. So that's the list of all the stocks that are moving and shaking around from the broader markets. Back to you.
Thank you very much for that. Let's talk about levels then. Some technical trading ideas. Rahul Sharma of Equity 99 Advisors is with us on the show now. Rahul, afternoon. Thoughts on the day so far? Not bad. Holding above 17,000. Is there a trade that you would recommend?
Good afternoon, Reema. See, definitely we had a good session till now, especially like such volatile week which we witnessed last. Today's stocks like Reliance, Hindalco, ONGC and good support from Pharma sector is doing good for the markets. But on the technical grounds, Nifty in particular has now been looking not so strong. And since morning, but till the time we cross 17,080 levels on the immediate basis, followed by 17,150 or 200, this instability or volatility will continue and sell or rise strategy shall be opted by the market. The support for current levels on Nifty will be 16,900 and finally 16,830, which we have seen as a strong support. And Bank Nifty, like similarly, 39,270 is the immediate support, followed by 39,000. And on the upside, resistance is placed at 39,650, followed by 39,700 levels.
Okay, some more recovery which is underway. So it continues to be very volatile. Bank Nifty is back in the green again. But in a market like this, Rahul, how would you trade individual stock names?
See, definitely some pharma stocks are doing good. First selection is Sun Pharma, which is trading near 980, 985 levels. Technically, stock looks like really good and ready for a good upside move. On daily charts, the stock has formed a strong base near 950 levels. And now this formation of a rounding bottom on daily charts looks strong to me. Target is set at 1020 levels, keeping stop loss at 970 for Sun Pharma. Second selection is from the PSU banking basket, which is Canara Bank, trading near 275. Although we have seen pressure building up in PSU banking basket, but this particular stock really looked really good to me as per the risk and reward ratio is concerned. If you see the daily charts of Canara Bank, the stock has been taking good support on the lower levels near 270 zone. With the current setup, it looks strong to me, and it can show really good moves on the higher side to the levels of 286 or 290. So it's a buy at current levels, keeping stop loss at 270 on a strict basis for the target price of 286 and 290.
Okay, all right, Rahul, thank you so much for joining us. So that's a technical take on the markets, but for now, we'll slip into a short break. Up next, in our Midcap Spotlight segment, we'll put focus on Morpen Labs. It's surging in now, up 15% in trade. Stay tuned for that. Okay, so the weakness in the mid-cap index that continues, and that is something that we are focusing on right now. Nifty, though, is up 50 points, substantially off from the highs of the day. But in light of the banking sector troubles in the United States and the European Union, the Finance Ministry has issued an advisory to public sector banks. Sapna Das is joining us to tell us more details on this one. Sapna?
Well, most of it, of course, has been flagged off by the Finance Minister herself in the Saturday meeting. But yes, some of the details that we can talk about, they are 2 to 3-fold in the sense, one on deposits, the second on in terms of, the lending advice so that ALMs are avoided, the requirement for a playbook to, manage crisis situations, and last but not the least, in terms of effective transmission of interest rates whenever a rate hike or a rate cut happens. Starting off first on the deposit front, well, the government has very clearly told the banks that they need to be more granular in their approach in terms of garnering deposits. Maybe corporate deposits and bulk deposits are not the best route. The choice of deposits should be more granular. Maybe retail deposits should also be focused on. That's one. Second, also in terms of the exposure to government securities, the RBI advised SLR benchmark needs to be followed, whether it's MTM or STM, that needs to be kept in mind. Third, in terms of the requirement of a playbook to handle crisis situations, and this is something that the Finance Minister herself has flagged off. There's a requirement for that. One needs to be created by the public sector banks. Also, in terms of their asset liability, to take care of or to avoid any kind of a mismatch, in terms of the pledged shares, banks have been advised to include that whenever they calculate their total corporate exposure. And these pledged shares should be monitored and provided for. That's a very clear advice coming from the government. Last but not the least, also in terms of the effective transmission of interest rates, the externally benchmarked lending rate should be followed for that, so that the transmission rates is more effective. Last but not the least, discretionary pricing should be avoided, and rating-based pricing models should be adopted. All of this to take care that the banks are healthy. One last point I would like to flag off. Well, this is a view within the banking sector that, all this messaging from the government has gone to the public sector banks. 40% of the business is controlled by the private sector banks. What about messaging to them?
Okay, thank you very much for that. Let's get to our Midcap Radar special, Midcap Spotlight. Ekta is here to tell us more about Morpen Laboratories, which has seen a double-digit surge today. Ekta.
Thanks for that. Well, yes, the entire pharma pack is buzzing, and Morpen Labs is one of the companies which is doing well in today's trading session from the broader markets. The US FDA has inspected the company's API facility at Badi, and they have issued nil 483s to the facility, and hence you are seeing that, the stock is reacting to a successful US FDA inspection. The company has indicated in their press release that the facility has been cleared by the US drug regulator on the 24th of March of this year. Now remember that this particular company does manufacture APIs, medical devices such as glucometers and BP monitors, as well as formulations, and they do have an OTC arm as well. Now API is actually 60% of their sales. They export to around 80 odd countries. They export to big markets such as US, Europe, Asia, South America, Africa. API in Q3 of FY23, however, was down around 8% on a year-on-year basis. But if you look at it from FY20 to a 9-month FY23, the revenue CAGR has been 26% for the API segment. Now, as a whole for the company on a consolidated basis, for Q3, the revenue was down around 7.8% year-on-year. The company did indicate that business has stabilized post the COVID-19 period and the fluctuations that had taken place on account of COVID-19. FY20 to 9 months, FY23, the revenue is up 30% CAGR. So on a longer term basis, yes, it's been a very healthy growth for the company. Near term, it has been a bit sluggish, but for today, it is reacting to the Baddi facility being cleared by the US drug regulator.
Thank you very much for that. Let's also now talk about Balkrishna Industries that's trading under pressure. Sonal, there is an ICICI Security note where they're a bit concerned about exports of Balkrishna Industries.
And they actually expect the weakness to continue for some more quarters. They do have a buy rating on the stock. The stock also has recovered, but thought we should highlight what this note is actually saying about the company as well. They maintain a buy with a target price of 2,378 rupees a share, but they expect weakness to linger for a couple of more quarters for the company, and industry exports continue to remain subdued. So that is something which is worrying the brokerage as well. Now, India's off-highway tire exports contracted by 9% YOY to $134 million. That is in January 2023. And this is something which is causing a lot of trouble. Realization levels additionally, other than volumes, have also contracted by 6 to 8% levels. That is from Q2 of FY23. And Balkrishna Industries saw destocking, which was way higher than its peers as well, in sync with faster stocking up as well. So there was some disconnect as well as far as Balkrishna Industries with its peers is concerned. This implies that against potential industry volume of 5 to 6% on a quarter-on-quarter basis, which ICICI Securities is expecting, the decline for Balkrishna Industries would be much higher. So versus peers and the industry, it is expected to underperform, and that's why ICICI Securities has highlighted that in its note today.
All right, let's get into a break then. On the other side, we'll talk about Vodafone Idea, which has hit another 52-week low today. Stay tuned for those details. Welcome back. A stock that we're looking at right now is Vodafone Idea. It's hit a fresh 52-week low at a time when its peers like Reliance Industries, which holds Reliance Jio, and Bharti Airtel are doing well today. There was a note which has come out from Kotak Institutional Equities where they're saying that we now expect the telecom tariff hike to get delayed to after the general elections. So earlier their estimate was that the telecom companies will hike tariffs in September of this year. Now they're saying it's only going to happen in June of 2024. So it's a good 9-month delay. Now, according to Kotak, the company most impacted by a delay in tariff hike is going to be Vodafone Idea. Their estimates show that Vodafone Idea is staring at a cash shortfall of 5,500 crore over the next 12 months. It needs to raise money either via a fundraise or a tariff increase. A tariff increase directly flows through into the bottom line of the company because the costs associated with it are the same. So margins of a tariff hike are actually very high. So the company needs it. In the absence or a delay of a tariff hike actually bolsters the case for Bharti Airtel and Reliance Jio because they will continue to gain market share at the expense of Vodafone Idea, so pushing the industry more towards a duopoly. So that's, the just point that I wanted to highlight, that more and more, if the tariff hike gets delayed, it's going to impact Vodafone Idea the most, while it could result in accelerated market share gains for Bharti and Reliance Jio. Yes, their cash flows won't go up. You need a tariff hike for the cash flows to improve. But even if that doesn't take place, at least they will continue to gain market share. And that's the narrative the street is putting out.
Okay, interesting. 6 rupees on Vodafone Idea now at a 52-week low, another one. So that remains in focus. But the other one on our radar is Nykaa. The company has recently seen a flurry of top-level exits. Mangnam is joining us to tell us about the latest on this one. Mangnam, another 2% gone on this one.
Well, the news came in the dying minutes of trade on Friday, as a result of which the street did not get a lot of time to react to, the exit of 5 mid to senior level executives from Nykaa itself. And these include the likes of the Chief Commercial Operations Officer, the Chief Business Officer of their wholesale business, the Chief Business Officer of their fashion division, and a couple of VPs of the fashion division as well. Now, this in isolation wouldn't have been big news, but this also follows a spate of resignations that we've seen starting from August of last year, where, the CEO of the FSN brands business, Reena Chhabria, resigned. Thereafter, it was followed by the CTO, Chief Technical Officer, resigning, Sanjay Suri. that was, then also the CFO, Arvind Agarwal, and most recently with their third quarter results, the CS and the compliance officer, Rajendra Punde, resigned with effect from February 14, 2023. The company on its part have said that, the company officials that is, voluntary and involuntary exits expected in a company which has an employee strength of over 3,000. They see some of these mid-level exits as a part of their standard annual appraisal and transition process. Jefferies has spoken to the management and they have a little more insight than what the company has said. They said that overall departure is small in the size, the overall context of the company. At the same time, some departures are based on performance, so they might not entirely be voluntary. The third thing is that with a lot of competitors, ramping up their beauty business as well, Nykaa employees are sought after assets. So as a result of which some normal attrition could be expected, and the company will replace these with a mix of in-house and external talent. Two things we need to monitor from here on. One, the impact of these exits on their overall employee cost, if they're replaced by employees costing less than the current employees or more than that, and the impact that could have on their margins. And finally, the impact on the company's revenue business performance on account of these 10 major resignations that we know of that have taken place in the last 1 year or so itself. Jefferies have a buy rating on the stock with a target price of 200.
Thank you very much for that. Let's shift our attention to some other stocks. Dalmia Bharat is on our radar. It's up as the company has entered into an agreement to divest a 42% stake in Dalmia Bharat Refractories to another promoter entity. Nigel joins in with the details.
Well, that's right. It's good news coming in for the Dalmia Group on the whole, because they've gone ahead and they've exited their 42% stake in Dalmia Bharat Refractories business. Remember, they had around 42% odd, and the total consideration that they'll be getting for this is around 800 crores. The entity that's buying this stake, this 42% stake, is the promoter entity. And the company is, they have given a timeline that they expect this deal to be consummated in the next 30 days or so. They've also given their timeline with the payment outgo. So first up, they'll receive around 20% of the consideration, which is around 160 crores odd. And the following two payments of around 320 crores each will be via NCDs, which will give, an interest of close to around 8.5%. Now, why is this positive for the group? One is because they said they're going to be exiting their non-core investments, and that's what they're doing. So step in the right direction. Second, they are aggressively looking to add capacity, and they are headed towards 100 million tons target that they had. So it gives them more cash in their hands that they can use it for this expansion. And point number three is the street was a little bit wary that maybe they'll do some inorganic growth, which will be in an unrelated space. Now, if this asset goes to the promoter entity, then that inorganic growth in an unlisted space will be done by the promoter entity and not from the listed entity. And that's why the street likes what they're seeing in terms of them divesting this asset. Back to you.
Okay, take your point. Thank you so much, Nigel, for that analysis. By the way, market has seen another recovery from the lows. It's a good 92-point gain on the Nifty right now. Midcap Index too has recovered just at the flat line with some negative bias. And Reliance Industries is really the one which is pushing Nifty higher. It has recovered a lot in last couple of minutes and is at the day's high. So Reliance Industries is the one which is contributing around 36 points to the Nifty gains that we are seeing right now, a majority of it. And the other ones that are pushing Nifty higher are these technology stocks. So Infosys, TCS, all of them are higher in trade today. HDFC Bank too is contributing around 10 points to the Nifty gains that we are seeing currently. So looks like it could continue to be a volatile session. Let's see whether we sustain this recovery or not. But for now, yes, 92 points higher at that 17,038 mark on the Nifty as we speak. We'll take your leave on this edition of Midcap Radar Inside Out when we return. Stay tuned for that.